I believe Alibaba is not a value trap, and I'm going to share with you why I think it is a long-term multi-bagger. I own Alibaba. Mo owns Alibaba. Do not ever buy a stock just because somebody on the internet owns it. The goal here is to teach a process, and I want you to learn that process and understand that. You are not to buy a company. I'm just going to show you why I believe it. So, what is a value trap? My personal opinion is, I don't even believe there's such a thing as a value trap. Either you're right or you're wrong. You either assessed it correctly or you didn't. That's it. Now, what's the biggest concern about Alibaba?
China.
China has a lot of negativity around it. Are they going to war with Taiwan? Remember, when Alibaba was starting to fall, it was the whole, you don't even own the company, it's cash flows. I don't hear about that at all anymore. That's the ADR business. And I was like, okay, cool. And even if Alibaba stopped being listed in the U.S. exchange, it would go to Hong Kong, and I'd still own my shares in Hong Kong or going to Merrill Lynch.
Yeah, or they go over the counter, and there you go.
So Alibaba has a lot of issues. But remember, you're not going to get a good price on a company unless the perception is a negative perception. And the perception on China is very negative.
Yeah, a lot of geopolitical issues, not fundamental.
It's all geopolitical issues.
Right.
And I look at this thinking, granted, it's 100%, I get it. I fully get that. The question is, do you believe in China long-term? Mo, do you believe in China long-term?
Yes.
I do too. Are they communists?
Yes.
Yeah, but not as communist as they used to be. And I do believe that as people see more and more wealth coming in, where's the fastest growth of billionaires and millionaires in the world?
China.
Now, could that change? Sure, but you have 1.5 billion people there who are now getting the taste of middle class, the taste of wealth. That's a hard thing to go back from. That's a very hard thing to go back from. But I repeat, are there issues with Alibaba? Absolutely. But let's look at the fluctuations of Alibaba just in the last year, Mo.
Yeah.
So Alibaba, 1 year, it's down 15%. It hit a high of 120, dropped to 80, back up to 103. It's gone up and down. Now, today, it's up to 76. The all-time, well, not the all-time low. The 5-year low, though, I believe is $58 a share.
Yeah, it's like 58 and 1 cent.
Right here in October of 2022. That's when it hit $58.01. That same month, it had a high of 86 bucks. It opened at 80, went to 86, fell to 81, and closed at 63. Guys, stocks are very, very volatile.
Yes, they are, especially when there's big news involved.
And the big news about China is geopolitical.
Yeah.
That's absolutely it. Are they going to go to war with Taiwan? What's going to happen there? Understood. But remember, if you're a long-term investor, bad news is your friend. It drives down the price of the stock that you want to own. Let's take a look at a little bit more about Alibaba. So, income statement. I'm going to go to annual for China. So, yes, they don't have the growth they used to have right now. 71 billion, 100 billion, 120, 121. This is the year ending March of 2023.
But they're still growing.
They're still growing.
And don't forget, they had like that COVID zero policy, which decimated their business.
Yes, COVID zero did not help out.
Decimated their economy, I should say.
Let's look at the annual cash flow statements. Here's the interesting part, guys. Their cash flow has been high. 14, 19, 26, 12 and a half, and then 23. So the free cash flow has been higher than the net income over the previous full calendar year. Now, they've also announced buybacks for their stock because they're like, these are really cheap.
And they've announced this spinoff to open up some value.
I don't think that's happening anymore, but we can find out.
Okay.
But if you look at their price of free cash flow, $193 billion market cap and $23 billion in free cash flow last year, you're talking about 7 times free cash flow. 8 times maybe. 8 times.
Yeah.
8 times free cash flow. That's so absurdly low. The other thing is, Mo, look at their debt. 193 market cap, 202 enterprise value. Not much debt. The difference there is essentially their debt. Good gross margin, 38%. Great profit margin that's very consistent. No dividend, and I'm glad they don't pay a dividend. Now, their return on invested capital is very low. Very, very low. But it's a cheap stock. It could justify it. They have a lot of growth potential. Let's go see what analysts are saying about Alibaba.
I just want to say, remember, they are going to pay a dividend. Remember?
Oh, that's right. They did say that. We were like, son of a gun.
Yeah.
So they're expected to do $9.49 in the year ending March of 2024, growing to $12.45, which is high single-digit growth in terms of their earnings per share. Revenue growth, mid to high single digits as well.
Okay.
The point is, if you can buy a company cheap, even if it's growing slow, you can still make a huge amount of money. That is my play on Alibaba.
Think about this one. It's so damn cheap from our analysis that we're going to show you.
Yeah. And yes, Charlie Munger considered his biggest mistake in investing. Doesn't mean that he thought because his company still owns the shares. He thought it was more of a tech play.
Correct.
Than a retail play.
He basically misinterpreted what the company is.
That's what he said.
Yeah.
And guess what? He was also buying at $250.
Yeah, true.
Right?
True.
So these are things to consider. Now, again, does it mean that it's a sure thing that's going to go up or a sure thing? No. But at the end of the day, if you look at companies, 20 or 30 companies the same way, you'll probably do pretty well if you can remove the emotion from it. You can sit there and say, I'm okay if the stock goes down. I'm okay if the stock goes up. That's the big key. So let's take a look at our stock analyzer tool. Now remember, we use this tool because every investment is a present value of all future cash flow. We don't know the future. All we can do is make assumptions about the future. That's why the first line here is revenue growth. Then we talk about profit and free cash flow margin. Then we apply an ending 10-year PE and price of free cash flow, and we put our desired return in.
Yeah.
So in these, I'm going to go look at our history. What was the last time we did Alibaba? Mo, when was the last time, do you remember doing
mid-December.
December 6th, actually. Now, I'm going to go lower on our revenue growth assumptions. I'm going to go 3, 5, and 7. I'm going to go super low.
Good. I went 5, 8, 11, so this is good. We have a
Actually,
spread.
3, 6, and 9, because I still think 6 is pretty low. Profit margin. I did 15, 19, and 23.
I did the same.
Free cash flow, though, has been higher in every metric, every time frame compared to profit margin. So I went 17, 22, and 27.
I did the same numbers.
Okay. PE, I put 16, 18, and 20.
I put the same numbers. I could actually go higher if they sustain being that go-to business for China.
Okay. Now, desired returns where I put my margin of safety in. This is where I sit there and say, okay, I need a higher return because it is China. There is a lot of geopolitical risk, and I could just very well be wrong. So I need to get that. Is it really worth it? So I put 13, 15, and 17%.
I actually have in here 20% across the board.
Do you really?
Yeah.
All right. Here are my numbers. You ready? A low price of 91 to 100, a high price of 186 to 220, a middle price of 133 to 150. That means if I buy it at today's value of $76 a share and the middle assumptions occur, for the next 10 years, I should make 27%. Remember, a lot of things have to happen along the way. Don't think, oh my God, 27%, this is awesome. You still need to do your research. Mo, what do you have on it?
68 to 77 on the low end.
Okay.
This is with 20% returns. 176 to 207 on the high. 111 to 130 in the middle.
Big time returns.
Big time returns, and I have a big margin of safety in there.
Guys, if you like our software in our community, please go to everythingmoney.com. We have a 7-day full access free trial. Thank you very much for your time.